Well, we've tried a couple.
We'll see what happens. How you doing, everybody? I'm JD,
And I'm Gail.
and you're tuned in to Gale Force.
From deep inside Bunker Foxtrot, located somewhere under the swamps of Central Florida, it's Gail.
And welcome back, everybody. Again, I'm JD.
And I'm Gail.
And how you been doing this week? Anything exciting happen?
Oh, been busy.
Oh, that's good. I've been trying to stay busy. Well, we really haven't got we kind of got a show planned for you. We're kind of winging this. We usually try to find out what's in the news, current news, and try to do some stuff on that. But before we do that, I want to quickly tell you about Sneakee Preppers, which hopefully we'll get going pretty soon here. We have a new channel here that we're going to be talking about. Not that we're thinking that there's a collapse coming and, apocalypse might be happening. But we want you to check out Sneakee Preppers here. We're going to kind of give you some advice on maybe if something does happen, you'll be able to survive it. So again, just please check out Sneakee Preppers, subscribe to it, and we'll be doing the show pretty soon. Again, we do news in a different way. We tell you news. It's new news. Matter of fact, I need to change. Let me get my finger over here. We need to change that down there. It says our views on current events. I kind of like new news. We give you the new news. So that's basically
our perspective on the new news.
Yeah. And let me start the show here. Here we go. So today, let's get into the news. I don't really know what's in the news, but we'll find out because right now it's new news. And one thing I'd like to talk about, and we'll get to it in a minute here, is I want to talk about corporate taxes because that seems to be in the news from Bernie and Elizabeth Warren. Is she the one that wants to take everybody's money? Wealth tax and all that. So we're going to talk a little bit about corporate taxes, and we're going to let you decide on really who's paying the taxes. And then, Gail over here will give his take on it. So we're going to talk a little bit about corporate taxes. Should we raise them or should we get rid of them? And me being see here, I'm a radical capitalist right there. I would vote no taxes because I'll explain all that in a minute. So we're going to talk about corporate taxes, and then that kind of ties into the income tax.
Yes.
And I'd like to talk a little bit about that, on how that's real. Government, as George Washington said, government is force.
Right.
The only thing they can do is force you to do stuff.
Correct.
Okay. And that's why the founding fathers wanted to make a small government.
Right.
Because they have force. Okay. And the income tax, we're going to explain that too, on how income tax is a forced tax. And we'd rather go to a voluntary tax because that's what this country was founded on, was voluntary action.
Yeah.
You can live with your neighbor and you guys can trade voluntarily, whatever you want to do. That's how this country started. But now we're back to force.
Yeah, well, the thing is interesting what you're saying there is like, they never didn't have income tax or these taxes until after, 1913?
Yeah, when the progressives took over, early 1900s.
Well, how do we fund the Civil War?
Yeah, how did we survive? How did we survive 120 years without an income tax?
The French and Indian War, the War of 1812. We didn't have a tax.
Yep.
We built roads.
We had hospitals. We'll get all of that in a minute.
Yeah.
Okay. That ties in with the corporate tax, which is what I want to get onto. But real quick, let's do a quick update. Oh, I don't have that up there. Damn it. The Yellow Vest movement. This kind of ties into it. So let's put that at the end because we're going to go from corporate tax. I can run this stuff. We're going to go from corporate tax. And then we're going to go into income tax, and then we're going to go into the revolution. Because is the revolution coming to this side? Okay. So I want to kind of explain and take just a minute here, if you don't mind, Gail.
Absolutely.
And there you are, but actually we want the pretty one. All right. So I'm going to kind of explain what's going on with corporate taxes. So I'm watching the watch here, and I'll try to, if I'm not coherent, let me know. All right. So we have a bunch of people that have jumped into the Democratic race,
Mhm.
right? Correct. You know, we have Bernie Sanders and who is it? Biden just got
Yeah,
into the
Joe
race.
Biden just announced yesterday, the day before.
And I think Elizabeth Warren is the one that she wants to get rid of the debt, student debt. So she wants to give free money away, which, you know, that's what Democrats do. I'm going for Bernie. I think I'm actually going to vote this year and vote for Bernie because he gives away free stuff, and I'm waiting for my free TV.
Right.
You know, so if he gives me a free TV, Bernie, you're my man. Okay, so let's go on. The Democrats are talking about corporate taxes, and have you seen it in the news here lately that there's a bunch of corporations that have just made a bunch of money. I mean, you look at their profit. You know, they release their profits and how much money they made, and then you have people like Bernie Sanders and Elizabeth Warren going, "Well, we have all these companies, but they're not paying taxes," and that's one thing. That's about the only thing they've said that makes sense, because no company has ever paid any corporate tax. No company has ever paid a sales tax. No company has ever paid this tax, that tax, or any tax. So I want to explain this real easy for people who don't understand how businesses work. Okay. So let's say I have a business that makes widgets. Okay. I
Okay.
want to get Gail back in. Are you still with me?
Oh, yeah.
Okay. So I make widgets. Okay. And I make a pretty good widget. Okay. And I sell it to people that come off the street. They have to come in my door and buy my product. They like it and they give me money. Okay. So at the end of the year, or the end of the month, or end of the quarter, or whatever, everybody knows what an accountant is.
Mhm.
Right? Okay. Real quick, I'm going to tell you a quick little joke that my father told me about accountants. And it goes like this. If you ask a mathematician what's 2 plus 2, he's going to say it's 4. If you ask an engineer what's 2 plus 2, he says it's 4.0. Well, if you ask my accountant what 2 plus 2 is,
He'll take and roll his shades down.
he'll go, what do you want it to be? You know. Okay, so every company has an accountant. And they used to have paper and books, you know. They'd write down, they had pads here back in the old days before computers. Okay.
It's called
Matter of fact,
it's called legal
yeah.
ledger.
I could probably use this. So let me kind of explain it real quick. If you own a company, okay, and at the end of the quarter, let's say they do all their taxes at the end of the quarter, because again, I'm tying this into corporate taxes and what Bernie and Elizabeth Warren and all these Democrats are talking about, corporate taxes. So I have an accountant, okay, and he says, well, I'm making it real simple. It's really more complicated, but this is a simple for you people out there and anybody else like me to understand how corporations and companies work. So at the end of the month, the accountant got the pad, and then he breaks it into two. Let's see if I can do this here. Into 2 columns. Okay. Let's see if I can see that. Okay, so we have 2 columns, not straight, but that's how companies work.
You're trying to say the accountants are crooked, are you?
Yeah, no. On one side, they have what's called expense, okay? And on the other side, they have what's called income, okay? So that's how all companies work. They have a column that says expense, and they have a column that says income, okay? So just remember that. So the income of a company, and Gail, if I'm wrong, correct me or whatever.
Okay.
The income is whatever service or product this company makes. When they sell it to somebody and somebody buys it, that person walks into the building and gives that company money.
Let's say $100 million.
Okay, so I have a widget, it's worth $100 million. They gave me $100 million. I give them the widget. Okay, and then at the end of the year or the end of the quarter, I keep that up. They have to report to the federal government because you know the federal government has to track everything. And they said, well, we made $1 billion this year. I sold so many widgets, and I made $1 billion this year. Okay. Well, Washington says, well, what's our take? Okay. And right now, corporate taxes are what, 20%, 25%? I think they just came
Something
down.
like that. Make it round numbers, do 20%.
Yeah, we'll say 20%. So at the end of the year, the company has to pay 20% of their profits to the government. Well, that's where the other side comes in. It's called expense. Okay. And on this column here is money that goes out the door.
Correct.
Okay. You have money that comes into the door. That's people that are buying the product.
Mm-hmm.
And then you have money that has to leave the door. That's an expense.
Right.
Okay. And the expense could be your workers. You have employees, but you have to pay every
Their
week.
wages,
Their
their
wages,
taxes, their benefits.
whatever benefits they have, that's an
Retirement.
expense. Retirement fund, that
Dental,
dental,
healthcare.
time off. That's all an expense. That's not money coming into the company.
Maternity leave, which isn't free.
That's money that has to leave the company. Well, then you also have maintenance of the building, like you said, right? And then you have...
They have to have insurance.
Yeah, insurance is an expense. And then advertising, whatever money they do to try to tell people how good their widgets are, that's an expense. Okay. And then you have something that people don't realize what's an expense, and that's taxes. Okay.
Right.
So you might have a local sales tax that the company has to pay every month to the
property tax too.
County. They have to have the property tax every year. That's an expense. Then they have the income tax if they're
water, sewer, garbage, electricity.
Any utilities, that's an expense. And then at the end they have the corporate tax, which let's say is 20% now. Okay, that's an expense. That goes in the expense column. All your taxes go in the expense column. And the income is only the money that comes in the door. Then you have what goes out the door.
Okay.
Okay.
And also,
I just want to make sure you're following this.
In the expenses, let's say you're making the widgets.
Okay.
And how much did you say was 100 million or $1 billion?
100 million. What number? It's a nice widget.
Okay. So you have to have also deduct from it the cost of the raw product.
The materials. Forgot about that.
Material costs.
Yeah, whatever the material cost.
And you
that's
have
an
to
expense.
have depreciation and maintenance of any equipment, tooling.
And then you have dividends to the stockholders. If you're a big enough company,
right.
you get dividends as an expense. That comes out if they make enough money.
Okay. That comes out of the net profit. It's
still an expense. That they're paying back their employee.
Yeah.
But you have to realize that big companies, they have, and Gail reminded me of this, they have like 5-year plans or 10-year plans. They say, hey, look, for the last 3 years, we've been expanding so much, 5% every year, but we need a bigger building so we can make more widgets. Right. So we have to plan in the future. We need to save this so much money and this much money, and by 5 years, we might be able to make a new building.
Because the bank that's going to loan them money to build a bigger building, they're going to have 5, 10.
They need 15. A plan. How are they going to pay back the bank?
They can't finance the whole upgrade. It's just like if you go and buy a house, can you just walk in like they talk this junk about buying a Volkswagen, sign and drive? That don't happen.
Yeah.
Okay. If you have to take and expand and you're going to spend $300 million to expand your factory, you have to have sign over assets or give it's called a secure loan. Yep. Whoever thought of that, right? There's something you have to put up as collateral.
And this is what companies do. They have to plan in the future. Okay. And you have to remember that the corporate taxes and the sales tax and all that stuff is in the expense. And they try to plan this out for 5 years because they have to know where their money's going to go in 5 years so they can build this new building.
And to compete with their competitors.
So, to get back to corporate taxes, you have Bernie Sanders and Elizabeth Warren and all these progressives saying that companies aren't paying their fair share and they need a bigger tax. So they want to take the corporate tax, which is now, let's say, 20%, and they're saying, well, we want to raise it to 30%. We think we need 30% because you're making so much money. Okay. Right. Companies don't plan 6 months in advance. They plan 5 years, 10 years in advance. And all of a sudden, they're going to find out that, hey, in a couple of months, your tax rate, the expense that you're paying out is going to go up 10%. Well, there is no, and I want to make this clear, there's been no company in the history of the world that has ever paid any tax. Now, you say, well, there's a corporate tax, the companies have income tax. They don't pay it. The owner of the company and the shareholders, when their taxes are raised, they don't open their wallet and say, well, I'm going to pay that extra 10% because the government says I want an extra 10%. They have to choose. They either have to come back to this thing when their taxes go up, and they have to decide, I need more income to cover that 10%, or I need less expenses to cover that 10%. It's not going to come out of their wallet. It's going to come out of the company somehow. So the company has to decide, The government says they need 10% more of the money. So do I raise my product 10% to cover that tax? And guess who pays that? Okay.
Consumer.
Or do they go to the expense side and say, we need less expenses to cover that 10%? And what you have under expenses, as we said earlier, were employees.
Right.
Employees are an expense.
And their packages.
And their benefits or whatever.
Right.
So the company has to decide, will you come into my building, come into my shop and pay more for my product, even though it hasn't changed any? Are you willing to pay more for it? Or the company has to decide, well, I need to get rid of some expenses. That means maybe I need less employees because I have to cover that 10%, and it only comes from these two columns. So if it comes from expense, that means they have to get rid of some employees or put them on part-time.
Put them on part-time.
And then they can find that 10% because of the expense, and then they can pay it to the government. Or they can say, I'm going to raise my prices and make that 10% up. So that means when you come in the door and buy the widget, you have to pay that extra 10%. The company, no company has ever paid a tax. They put it into either the price of the widget they make or they fire people. They have to make that money up somehow.
His expense is cost of doing business.
Expense is the cost of doing business, and income is how much do I charge for that. So you see prices going up, it's because they have to cover taxes. It's the end consumer. It's me and Gail and my lovely wife engineer over here. When we go buy something, we're paying the corporate tax because we decide, come on, we decide that we want to pay that price for that product. Anything we buy, it's the end consumer who pays the tax. So I just want to let you know that any corporate tax is a hidden income tax on you.
Right.
Only you, the consumer, the people who buy things, pay taxes. Companies don't pay taxes. Okay, I just want to make that clear. You can make the corporate tax 80%. They're going to either fire people or that cost of that product has to go up. The company is not going to go into their wallet. The owner is not going to open up his wallet. He's not going to sell his mansion to pay that tax. He's going to say, well, I need to either get rid of people or you, the consumer, is going to pay that tax.
The product goes up or the cost of making the product goes down.
Yeah, so I just want to make that clear that you at the end, when you go buy that hamburger or that milkshake or you walk into Walmart to buy, whatever you want to buy in Walmart, you are paying the corporate taxes. So when you sit there and say, yeah, I need to vote for Bernie or Elizabeth Warren because they want corporate taxes, that means you're voting to raise your taxes because only you pay the tax, the corporate tax. The end user pays all taxes. Companies and buildings can't pay taxes. Only the people that walk in the door.
If you want to be European, it's called a consumption tax.
So this kind of ties into what's happening I want to reverse the order. This kind of ties in to the yellow vest movement.
Correct.
So real quick, can you give us an update on what's happening with the yellow vest movement?
God.
And if you don't know what the yellow vest movement is, it's been going on for 4 months.
24 weeks, I think.
Yeah, since December. And you don't hear much about it because it's happening somewhere else. But Gail is going to kind of give us a quick update of what's. Can you give me just a quick update, or are you walking out?
Absolutely. Absolutely.
So what's happening in France?
Happening in France. It's just progressing along. They've upgraded and told the police that if they feel their life is in danger, they can use real ammunition and all kinds of stuff. What started this whole thing is because of expenses and money borrowed from the banks and all the immigrants. They needed more money.
The government did.
Yes.
France needed more money.
The government, which is run by the banks, just like ours is run by the banks.
Yeah.
Here we call it the Federal Reserve, but it's private banks.
Yeah.
They wanted more money to pay off the debt. Supposedly they just want interest. They don't want to pay off the debt because once the debt's paid off, they don't get any more income. It's like when you pay off your car, the bank no longer gets payments from you.
Yeah.
That's why they send you notice.
That.
Oh, well, we'll give you a special rate so you can buy another new car. They want you back in debt so they can collect money. You're nothing more than a debt, and they are the leeches and fleas sucking blood from you. Back to the yellow vest.
Yeah, the yellow vest, because there are a couple groups that have joined them.
Oh, the unions
are now walking with them. So the unions are pissed off at the government. What's happening in France, and it's called the Yellow Vest Movement, in case you haven't heard about it, is the citizens are getting together every weekend and they're protesting, and you don't hear this much, but they're protesting about taxes. This is all about taxes.
Oh, yes.
It's about how the people can live. They have no money left over at the end of the month. Actually, not the end of the month. They have no money left over at the beginning of the month when they get the money, because once they get the money, it's gone. So the people are protesting in France, and now the labor movement, the unions have joined them, and it's getting bigger. This is kind of like what happened in America when they started throwing tea over
Right.
the boat.
Taxation without representation.
Yeah, they're saying, hey, the taxes are getting out of hand here. We don't have a say about all these taxes. Now Macron, is that his name?
Macron, yes.
Macron. He's the leader of France, and when he got in there, he said he's going to, he's going to straighten things up by taxing everybody, because that's what government does. They use force. And now he's saying, well, I'm going to lower some taxes and make these people go away. Well, the people aren't going away because they don't want to hear a small tax cut. They want to say, hey, stop taking our money. And it's happening in France, and it's probably going to come here pretty soon. People are now protesting their government, even though they say we need more government, like Bernie Sanders. And matter of fact, I want to get my good buddy here. Do I still have him? Oh, there he is. Yeah. Here's my man, Bernie. He wants the government. He says the government is so screwed up, we need to straighten it out by making it bigger. It kind of doesn't make sense. It's bad. It's so bad that we want to make it bigger.
It's like fighting a disease by giving you another
disease, and then yeah. So it kind of ties in. We have corporate taxes, which again, no company has ever paid a tax because that goes in the expense column.
The consumer pays.
And now we find out the consumers are getting pissed because everything they buy costs so much, and they're saying, "Hey, that's not fair. We need to punish the companies by making them pay more." And when they do that, it just makes their stuff more, so they get more mad. Okay.
There's nothing free.
Yeah. So the people in France and in Europe will be rioting pretty soon, and they're going to have their own probably revolution.
What kicked off need to get people realize this. What kicked off a lot of this stuff is like the lies they tried telling us 10 or 12 years ago, this carbon tax and stuff. It was just another way to empty people's bank accounts.
Yeah.
That's like zero interest rate and all these kinds of things. What really kicked it off is because there's demographics. And what's called the baby boom generation is those that born after World War II up and through the 60s.
Yep. I barely made it in there.
Are starting to retire in mass.
10,000 a day. 10,000 people start taking Social Security.
Here's what happened. When they started all these taxes to pay for all the free stuff, there's nothing free.
Wait. There better be, because I'm voting for Bernie and I want my TV.
Yeah. The new carbon tax wound up applying to everybody. You say, what problem is that? Well, if you're on what's called a fixed income, like a retirement program, and then they tax your retirement income, Social Security, or in Europe they call it a pension. They call them pensioners in Europe.
Yep.
Okay.
Makes it sound good.
Yeah. It's just a fluff thing.
Yeah. It's like
those who retired are called pensioners.
Yeah.
All the new taxes apply also to pensioners who are on a fixed income, and let's say you get $2,000 a month to live on. Well, they raise the tax up, and it also attaches your retirement income. Now you have a choice. Are you going to buy groceries or get your medication?
Yep. Mm-hmm. And that's why they're doing this protest in Paris.
Because everybody knows sooner or later, I don't care if you're 35 or 65. You're either retiring or someday you want to retire.
Yep.
And if you have to take and sell your house, or if you're in an apartment, go live in a spare bedroom or basement of your children's apartment. Mm-hmm. Just to get by. See, what's coming because of these things?
Yep.
Is called the Oreo generation thing.
I've heard of that, but
okay, that means the Oreo generation is the working group of people between 30 and 60. That's the creamy part in the middle.
Yep.
Their parents can't afford to retire, so they have to go to their house, and their parents live with them.
Taking care of the parents.
And their kids, they've got these degrees in worthlessness at all these colleges, and they got $50,000 to $100,000 of debt, and they too can work at Starbucks.
Yeah, they got a degree for liberal arts.
Right.
So you know,
Your liberal arts means
go through the help section and see if there's any, you know, if anybody's looking for liberal arts.
All right.
Yeah.
So they wind up working for serving hamburgers at McDonald's, working at Papa John's, Pizza Hut, or being a barista, which is a fancy word like here's your coffee.
Here's
man.
your coffee, yeah.
Have a good day. Well, their kids are living in the basement. So Oreo generation is you're the one working and busting your ass. Grandma and grandpa are living in one room. Your kids are living in the basement, and you're all screwed.
Yeah.
So keep on getting free shit so your taxes keep going up.
Yep.
Because that's all it boils down to.
And real quick, we only got a couple minutes left. That kind of ties in to the income tax. And we went to the corporate tax. Again, no company or corporation pays tax. It's only you, the end consumer, that pays the tax. Then we went into the consumers and now pissed off, at least in Paris they are, because all the prices are going up. And all of a sudden the money they were getting in that they planned on for 10 years, remember we talked about companies, they plan for, well, pensioners, they know, hey, I'm getting this so much money this month, I know where my money's going. And all of a sudden they open up their check and find out the check's a little less than it used to be. And now they say, well, it's $200 less. I was getting $2,000. Now I'm only getting $1,800.
How am I going to buy groceries?
What am I going to do? It changed. They can't plan because
how am I going to buy my blood pressure medicine?
They changed it, and now people are freaking out. It's like, whoa, I planned on having $25 left over. Well, now you already took $200 over before I got, and I don't have the 20. I'm out of money. What do I do? So that's what's happening.
That's the same thing.
So this ties in.
Program is screwing things up.
And I want to tie this in to the income tax, and I want to kind of explain it here. We got a couple minutes. I'm trying to do this in a PC way, or, you know, I don't know. Let's take, I'm going to say slavery because most of us in our generation, we call them slaves. Back when the country started, we had slaves. So what is a slave? Okay. A slave is somebody that will work all day and produce something, okay? And then his master says, thank you for that. Thank you for, you know, going through my crops and doing whatever you do. And I'm going to pay you enough money, and it's not money. I'm going to give you food to make sure that you and your family.
And housing.
So I'm going to give you food and housing, and then all day you work for me, and whatever you produce is mine. But I'm going to keep giving you food, and that should make you happy enough. At least you're alive, and you can have a family.
Kind of like Section 8's housing and food stamps. Huh?
So that's how slavery worked. Okay, I just want to get you an idea. Slavery works like they have a person there that produces it, but they don't see any kind of income, any kind of money, but they do have a little bit of food. So every, you know, in the end of every month, at least they got food and a roof over their head. Okay, that's how slavery worked. For 120 years, America didn't have an income tax. Okay, I'm tying this in, just kind of follow me. But we also had railroads, we had hospitals, we had universities,
libraries.
We had schools, we had, you know, what I said, railroads, and you know,
had actual roads.
We had an army, and I think they actually had a, you know, navy back then. So for like 120 years without income tax, the country survived pretty good for 120 years. Okay,
Yeah.
And then all of a sudden they decide in 1913 we're going to have an income tax. So what is an income tax? Income tax was originally said, well, we're just going to tax the very 1%, those rich people that we hear again today. We need to get that 1%.
Right.
Well, in the 50s, in the 40s, we had what World War II, and the government needed more money. So they instituted a really neat trick, and it's called the withholding tax. They don't want to wait to the end of the year for you to do your taxes. You know, and that's what the income tax was. At the end of the year, if you were rich enough, you had to pay that income
Right.
tax.
You had to write him a check.
Well, during the war, the government said, well, we need money right away. So what we're going to do is we're going to institute what's called a withholding tax.
Mhm.
We're going to make you every week before you get your check is when you pay your taxes. And we're going to take it out of your check before you get the check so you really don't notice it.
Mhm.
Okay. And so when you get your check, you look at it, go, that's how much I made. Well, if you look real close, you can see you actually made more, but there's a withholding tax. Okay.
Mhm.
So we got kind of brainwashed in for the last 50, 60, 70 years that before you get your check, the government gets their share.
Right.
Okay. And if that share keeps going up, if the government keeps taking a bigger withholding tax, and people are now living, what's it called? Paycheck to paycheck.
Paycheck
We hear
to
that all the
paycheck.
time. We have Bernie Sanders and Elizabeth Warren, and everybody says, all these people, Americans are working paycheck to paycheck. If they miss a week, they're gone. That kind of goes back to the story I'm telling you about the slaves. At the end of the day, or the end of the week, they got their food and their housing, but nothing left over. That's all they have. Isn't that pretty much what's happening today? When you get your paycheck, you have to pay your insurance, your car payment, you have to pay your mortgage, you have to pay all your utilities, you have to buy food, you have to buy gas, you have to pay all those freaking taxes that are going around. So pretty much, when you get your check, it's already gone, which means the government got their share. That sounds like a slave master. He got his share, but gave me just enough to where I can just barely live. What's the difference between slavery back in the 1800s and today? You tell me what's the percentage that makes you a slave? Remember, the government's getting your money before you do.
They started the Revolutionary War over a 3% tax.
On a breakfast beverage.
Right.
And people were pissed. And people today, when they get their check and see how much is left over, they go, oh, well, that's the price you pay.
How about if we
for
talk
being
about
civilized.
syntax for just a minute?
I'll give you 3 minutes.
3 minutes. Okay.
Go.
Syntax. Okay.
You mean a syntax? Is this?
Yeah. Adult beverage.
No, don't
syntax.
tax that. No. I said don't. No. Hey, get me out of there.
Yeah. Okay. Syntax. That's for alcohol and tobacco. My daddy told me back during the 50s, they come up with a plan to help with the World War II debt effort. For 5 years, and for 5 years only, cigarettes were 15 cents a pack.
Ooh.
They went to 25 cents.
Oh.
And it was only going to be for 5 years to pay for the World War II war debt.
Yep. Did that tax?
So how many cartons?
Did that tax go away?
How many packs of cigarettes have you bought for 15 cents lately, Dwayne?
we
For
buy
15
cheap. We buy
cents?
cheap one, but I don't think there's anything that's
35.
15 cents.
35 cents, but I was.
Okay.
Yeah.
Now let's go this way. Since they never do away with tax.
That tax didn't go. Are you saying it didn't go away after 5 years?
No. Now they've upped the taxes and stuff on it. Oh well, we've got to do away with tobacco because all these people got lung cancer. If you look back in almost 70 years, 65 years at least, of taxes on cigarettes, there are trillions, and I didn't say millions, I didn't say billion, I said trillions of dollars they've collected off tobacco taxes. Oh my God, these people that are dying from lung cancer, they're costing the government so much money. Oh, you've collected trillions, but maybe $100 million worth of medical benefits.
It's like, where did it all go?
$100 million worth of medical benefits because some people died from it, and you've collected trillions of dollars. I think you're kind of a money-grubbing
Yeah.
beehole.
Who's
myself.
greedy? I love that. I got to get my buddy down here again. I love Bernie. He says, we got to get rid of this greedy stuff. And who's greedy? It's the politicians. They want to just grab your money. That sounds pretty greedy.
Yeah.
Yeah.
So, anyway,
All right, we're pretty much at the end of the show here. So,
don't take everything we say too serious, but we don't lie.
yeah, we give you new news. So real quick before we end the show, I just want to remind you again, if you will, do a subscribe and like us, and share it with people. We're gonna have a contest here.
And the bell thing over here, hit the bell.
Oh yeah,
so you
the
get
little bell
noticed.
so you get noticed. But I'm breaking this over the news with my good partner Gail here. Hopefully, we're going to do a contest here or a giveaway in a couple of weeks, and I'll put that on the website. Again, you can find us on a couple of different places. Again, if you're watching on YouTube, do subscribe. You can find us on YouTube under Gale Force Creations. You can find us on BitTube under Gale Force. Steam It under Every Bit Matters. Just do a search for @EverybodyMatters for Steam It. Trying to keep that updated.
Okay.
And then we're also on Facebook, which we've changed our page on Facebook. You can find us under Every Bit Matters, but you can do a better search if you do the @ sign, Bring Back Liberty. Okay, that's because there's a couple Every Bit Matters. I didn't know that. So we're under Every Bit Matters, but just make sure it says Bring Back Liberty, and you'll find us there. And I've changed the page, and we're going to be doing all kinds of neat stuff on Facebook. So hopefully that'll come up. And then if you need to email us with some comments or some ideas for a show, it's galeforcecreations@gmail.com.
All righty.
So what else is going on before we...
Not much.
Yeah, not a whole lot. So we managed to get through. And again, we do this every Sunday. We try to do a main show on Sundays, and we haven't been doing it lately, but we need to do some weekly updates.
Yeah.
And like I said, I got some new equipment coming in. So, broadcasting here from the bunker, we're kind of limited on space, but I found some equipment, and hopefully we'll do a better broadcast, and maybe we'll do some live broadcasts.
All righty.
If that works. That sound good?
Sounds great to me.
Okay. And one more thing. We haven't got many videos on it yet, but if you would look us at Sneakee Preppers, we're going to be doing some stuff on if the apocalypse does happen, how you can survive it. So.
All right.
All right. So other than that, there it is. De-dunk, de-dunk.
It's okay. I'm Gail.
That's it. And I'm JD. And again, thank you. No. There we go.
Badonka-donk. Badonka-donk.
I'm JD. And
I'm Gail.
thank you for listening to us here on Gale Force Creations. Again, real quick, just right down there, do subscribe and a like, and let your friends know about it. We'll talk to you next week. Thank you.